Hello, and in this video we are going to talk about order flow. Now, if I ever ask you what is order flow, I expect one answer, and that one answer is mitigation. Now, let me just put this there. There we go. Now, the reason why I say this is because order flow gets mistaken for structure. Now, order flow is not structure, and structure is not order flow. So what actually is order flow? So let me find my brush. Okay, so bearish order flow, right? Let me show you, and then you get a release. Okay, so bearish order flow. Okay, well, I'm not going to say bearish or bullish. It's the same thing for either one. But say you got a breaker structure, right? And you obviously have your order block, and then that order block gets mitigated. Okay, another breaker structure, that order block there gets mitigated, right? Mitigation, another break, order block gets mitigated, and so on. This process of mitigation is healthy order flow, right? So order flow is basically where the mitigations have taken place. Same thing for a bullish example, and then you get a full push. You get mitigation, and then you get that full release. Okay, that is healthy bullish order flow on any time frame. It doesn't matter what time frame you're looking at, it's the process of mitigation. Now, why this is important is because if you are going to see it in the sense that so obviously we have our two rules for trend, right? So obviously we have our two rules for trend. But if you're thinking about in terms of your POIs or what will invalidate, you need to see what's been mitigated and what hasn't. Okay, so for example, when you get your OBs mitigated, and then you generally get a full push, a full release. Okay, that is healthy order flow, right? Now, in terms of finding your POIs, right, you need to find what's been mitigated, and this also helps identify your invalidation points. Because say for example you missed this first mitigation, you missed the first entry point. Okay, your second one. Now in terms of our two rules, we have our impulsive OB, that's one, and our successful retrace, that's two. Okay, would we even look at entering at number one? We wouldn't. Why? Because it's already been mitigated. So our invalidation point is going to be here at the bottom of this OB that is sitting here, because it's yet to be mitigated, and that's exactly what happens there. Sometimes, right, sometimes you get a push, right, and it flies, and then what it does, it comes next to it, and then it goes again, and it comes back, and then it goes. Why does that happen? Because obviously it doesn't break structure, so we haven't changed our rules in this sense, but this OB that's here has not been mitigated. So for order flow to be healthy and to continue to be intact, apologies, for order flow to be intact, right, you need to have that process of mitigation. The reason why this one would be important is because this one has previously mitigated another one. Now, this is when it comes to thinking about OBs and your POIs, which I'll talk about more deeper in another video. But in terms of your order block, right, this order block has mitigated the previous one. Okay, so this one holds more value. Okay, and obviously whatever's happened here that caused the first push, it was not strong enough, so it didn't even react off an order block. So don't worry, you still need to follow where the mitigations are. So generally, to follow healthy order flow, you want to see what's been mitigated and what hasn't, and I'll show you an example of this, right? However, you can get unhealthy order flow as well, and this is generally what you can see when you have a pullback. For example, when you have obviously something like this, and you obviously have your order block here, what you tend to see is obviously during your pullback you get this. Now, don't get confused between order flow in this situation. This is all intraday. Say this is the 4-hour move, and you got this as the 15-minute move. You have mitigation, and so on. Too much mitigation is unhealthy, right? You want to have mitigations that are sort of pretty much split, and generally when you do get mitigation, and then you get a full release, generally you have like 2 or 3 mitigations and you get that full push, and then because we've all seen it where you know, you see a trade just fly after the first couple mitigation and then it just goes, right? That's healthy order flow. Whereas if you're getting mitigations constantly like this, right, that's not healthy. But this is part of a pullback. Just bear that in mind. That's generally what you will see. If you ever see mitigations that are like so close together, so compact, you know, this is basically a form of a range within a channel, right? But I'm not going to go too deeply into it because even I don't think of it like that. Essentially, the way I see it, and this is essentially what the intuition phase is trying to show you, is exactly how I think. I will not be thinking that this is a channel and so on. I will simply see, obviously there's loads of mitigations, you know, weak order flow, but even then I wouldn't even look at that because I'll be generally looking for that higher time frame bias, which is generally supports the whole healthy order flow anyway. And this has already been factored into the strategy if you follow it using the two rules as taught. But this is giving you a better insight as to how the two rules actually was devised. It's not as simple as just having two breaks of structures. It's fully based on everything that you need to be focused on. But this is giving you the theory behind it that you guys need to know. So let's get rid of this. So let's look at this, right? I'm not going to go too far. Let's go from, let's just say from this wick. That's like a quite obvious wick, and this low. Okay, so we have a break of structure, right? This is very rough, but we have a break of structure. Okay, break of structure 1. We have an order block, mitigation. There we go. Bear in mind this is daily, so obviously this process of mitigation is happening after a while. So we have another break, mitigation. Okay, another break here. Okay, this one, mitigation, and then we have that full push, full release. Okay, at this point. So mitigation, 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 and full push. Okay, so this is healthy, that's healthy, and that's healthy. This is perfect bullish order flow. So in the first video, I was saying that we called this short, given the fact we still have bullish order flow. So where did that come from? So we need to think, where is order flow being fractured? So in terms of this high, where did it come from? Because we created this from this low, we created this high. Okay, and then we broke this high from here, from that order block there. This one needs to be mitigated, right? And this, whatever was in this wick, is still unmitigated. But the fact that the first order block, okay, that caused that needs to be mitigated was violated, okay, that is order flow fractured, okay? So that's what we call fractured order flow. Now, when this is the case, this is the first sign of a change in trend, right? And obviously it's a break of structure. But in terms of order flow, your bullish order flow has now been ruptured, and now you're going to be looking, you know, you're going to be looking for an excuse to look for shorts, right? And that the reason being is purely because of this. It's just because of that fractured order flow, and that's all it is. And obviously, following the two rules, that's rule number 1, where you have that first break of structure, right? Obviously the second break of structure confirms the trend in that case, right? So in terms of understanding order flow, the main thing you need to understand is where the mitigations are, and understanding where which order blocks have been fractured, and whether you've still got healthy order flow for bearish or bullish. It doesn't really matter. So in terms of when you're looking for trades, well, you need to look at what has been mitigated and what hasn't, okay, and then focus on whether that order block, right, has been violated or respected, because generally that's going to be the last point where you're going to decide that, okay, order flow has changed now, right? But obviously we've got the two rules to sort of tell you that anyway. So this, again, this is just giving you the breakdown of how the two rules come into place. So in terms of order flow, you just need to understand the mitigations. If you have bullish mitigations, like mitigation like this, you've got bullish order flow, and it's healthy, right? If you've got bearish mitigations like break of structure, mitigation, break of structure, mitigation, and so on, okay, that is healthy bearish order flow. And that's all you need to understand. So in terms of order flow, you want to look at that. You want to look where order flow is being fractured, and that is your first sign of building the story. That's your first sign of intent. So what I mean by intent is when you get the first break of structure, right? That's your intent to whether it was going to go short, it's going to go long, but it's not confirmed. So that's why we're going to use the word intent, okay? And generally, when this happens, okay, order flow is being disrupted, whether it's bullish or bearish, it's going to be disrupted, okay? And this is the same for continuation trades and reversals, exactly the same principle, because at the end of the day, we're still going to trade that lower time frame reversal, right? Even if it is a continuation trade, it's still a reversal on the lower time frame, right? So essentially, understand the fact that order flow is a process of mitigation, and healthy order flow is generally when you have a few mitigations and then you have a full release. If you have if you have too many mitigations, okay, that's a little bit sus, and generally you should just be a little bit on edge and understand the fact that order flow may not be as strong as you think. But remember, it's still based on the two rules, so carry on following the two rules, but now you have the understanding of what order flow actually is. So whenever we say that order flow has been ruptured, you would understand the fact that an order block has been violated, basically. Okay, and then now in the next video we're gonna start thinking about reluctance of price. So I hope this video clears up order flow, and let's move on to the next video.